In the last week, late-line business has been following the growing tensions over the government's proposed reform to payday lending, an industry which has grown tenfold in 10 years in Australia by offering small, short-term loans at very high interest rates to consumers who often can't make ends meet. Assistant Treasurer Bill Shorten is also the Minister for Financial Services driving these reforms, and we spoke a little earlier. Minister, thank you for joining us.
Good evening.
Well, rates on hold today. Do you hope to see rates go down by year end?
Listen, the Reserve Bank's independent. The decisions it makes are up to it and the evidence it's got. I'm pleased the rates are on hold. We'll have to wait and see what happens with the economy. There's no doubt in my mind that the mining boom's good for those affected by the mining boom, working in it, but that we have an uneven economy and that the high dollar and rates are hard in other parts of the economy.
One of the reasons, of course, they're given is the international markets at the moment and the situation in Europe and the US. We've had the European Commission president here who says Europe is not heading for a recession. Some people in business find that comment extraordinary. What do you think of his views?
Well, I know that Australia is very interested in what happens in Europe. We're very interested to see what the liquidity of the European banks are like. We're equally keen to see across the North Atlantic how the Americans are going handling their debt issues. But we shouldn't forget, in amongst all this doom and gloom about Europe and North America, that India and China do as much trade with Australia as the whole of Europe and North America.
Those two big nations, as you mentioned, are also dependent on Europe, though. Do you see a recession on the cards in Europe?
Listen, I think that there are problems in Europe. You just have to look at the difficulties in the bond markets in Italy, some of the challenges for their private banks, the German and the French banks in Europe, the fact that there's been a series of bailouts. So what's going on in Europe is tough. But in terms of what that means for Asia and Australia, 7 of our top 10 trading partners are Asian economies. Our commodities boom certainly is fueling items which Asian economies want. So fortunately, we don't have all our eggs in the European basket.
Also this week, we saw the unions arguing that the Productivity Commission should butt out of industrial relations. Is that your view?
Well, I'd need to know what the precise quote was. The Productivity Commission's got an important role as an independent economic research body. But what I also know is that industrial relations is best left to the workplace. Unions and employers engaging in collective bargaining, trying to seek value and wealth creation for both employee and employer.
But it's an integral part of productivity, surely.
Sure, and there's many people who've got things to say about industrial relations. The Productivity Commission reports to me. I have absolute confidence in the Productivity Commission. But what I also know about industrial relations in Australia is that the conservative debate, which says that if we could only just get rid of the industrial relations framework, we'd have a new nirvana of productivity. It's just not that simple. Productivity is influenced by lots of factors, from capital to technology. I also think there's a big role for leadership in the workplace. In my experience, and I've dealt with 1,000 different corporations, bargaining can work, you can gain productivity, but it requires hard work. The time to make productivity improvements isn't at the wage negotiation, it's the intervening 2 and 3 years. And all too often people in between wage negotiations perhaps don't focus as much about the day-to-day improvement in business, which is the real meat and potatoes of productivity.
Let's move to your financial reform agenda and payday loans. And boy, the payday industry is pretty mad. They say they'll lose 2,000 jobs in largely Labor electorates due to your proposed cap on fees.
Oh, well, the payday lenders don't want any change at all. I've met with each of the big players, I've met with their peak body, my staff and Treasury have been meeting constantly. There are caps already in a range of state jurisdictions. State governments all agreed, Liberal and Labor all agreed, that the Commonwealth should regulate this provision of credit. What we are doing is pretty modest.
One of those people that you've been meeting with, Peter Cummins at Cash Converters, the largest player, says that his EasyCorp deal is in tatters now due to the bait and switch that you've performed on him. And I'll quote, "The Minister intends to wipe out the micro-lending industry. Over 2 years of negotiations with Treasury and Government, we were led to believe that the Minister had no intention of doing that. That's the reason EasyCorp withdrew, because we led them to believe the same thing."
Oh, I can't tell you about the internals of the business. I do know that in recent years, Cash Converters has recorded massive profits. I can understand that gentleman and others taking a position to defend their slice of the business. What I'm interested in is the consumer. What I'm interested in is making sure that because people who are very poor and have a desperate need for money don't get taken advantage of. Now, I am sure that it is possible to work through these issues. If the payday lenders just want to engage in name-calling and try and intimidate the government and say that we're perfect and that we can't make any reforms to this business, so be it. I'm interested in making sure that people who are down on their luck, people who've got a desperate urgency to pay bills, do not get ripped off. That's all. And if there's nothing wrong, people aren't getting ripped off, well then we'll work through the issues.
They say that the industry says that the cap now means that they're working basically below the cost of the loan. They say that the number of consumer complaints is negligible. They've got now a petition with, I think it's 21,000 consumers arguing against you.
Well, the fact of the matter is that there are critics of the payday loan industry, from Joe Hockey, Shadow Treasurer, right through to all the consumer groups. I didn't invent the controversy around payday loans. I didn't invent the debate which has a lot of people in the street saying, why on earth do you need to charge 48% interest? Why is it that people can borrow a small amount of money, pay a large amount of interest, and if they can't pay the interest, they get rolled over to bigger and bigger debts? What is so wrong with our proposition which says that a person seeking a microloan should not be required to pay back more than double that amount in a rollover? What is so wrong with requiring that a consumer shouldn't be given more finance to pay the first loan and get into a greater spiral of debt? These issues have a solution, but the payday lenders in my meetings just said, don't touch us, you can't, we're not interested in change. And the problem is that we do get complaints. And if they say that everything's perfect in their industry, well, that is not the message I'm getting from a whole lot of other people.
More generally on your FOFA reforms, financial planners are now charging a percentage of funds under management and calling it a fee. Isn't that just getting around your reforms, which are trying to ban commissions?
No, not at all. Let's be clear. What we want to do in Australia is make sure that people have confidence in their financial planning advice. We want to eliminate conflicted remuneration structures. We want to eliminate the sort of scenarios we saw where financial planners in Trio were receiving 10% commission from the product manufacturer to advise customers to go into the product which subsequently failed.
But if they're still just now receiving a percentage of funds under management, isn't that effectively still encouraging them to push a product?
Oh no, we made it very clear that asset-based fees wouldn't be covered by what we're proposing, but we are banning trailing fees and commissions. 5 years ago, no one would have said that what we're accomplishing now was at all possible. 5 years ago, people said it was some financial planners said it was the end of Western civilization if we were to require that they work in the interests of the customer, the best interests. But we're doing that now.
Minister, I can't go without asking you one on the leadership. A recent Peter Harcher piece had you at a business lunch described as a particularly brash performance by you in front of some elite businessmen who came away with a message of you saying, I'm ready to serve as leader. Is that accurate?
No. And when journalists want to write and quote unsourced people, they're entitled to do it. But I'm happy to go and talk to the journalist, but no, I don't accept that, and I don't even particularly know which event he's referring to.
Minister, thank you for clearing that up for us. I thank you so much for joining Late Line Business.
Thank you.